Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we are tracking for you this evening: subdued global cues weigh on Dalal Street equity stage a rebound in late afternoon trade on indications that the US market may recover from Tuesday's cuts, but it's not enough to extend a four-day winning streak. The rupee reverses Tuesday's gains as higher than expected US inflation sparks a global dollar rally. The listed entity will fund the joint venture between Vedanta and Foxconn, says Anil Agarwal. Expects commercial operations to begin in 2 years. Vedanta will hold 62% stake. Foxconn will hold the remaining 38%. That's a CNBC-TV18 exclusive. Prime Minister Modi set to release the National Logistics Policy on Friday. The policy aims at lowering the cost and providing a single point of reference to facilitate trade. The Department of Revenue Intelligence seeks to recover 330 crore rupees from Hero Electric for allegedly evading customs duty. It is the latest whammy for the company after subsidy flows under the FAME and PLI schemes were suspended earlier this month. Less than 20 hours to go before crypto network Ethereum institutes its biggest software update to date. Major cryptocurrencies and tokens like Bitcoin take a beating ahead of the merge, which is seen as a potential threat to the miner business models and the ESG rankings of investors. A court at the European Union upholds the antitrust penalty imposed on Google over the Android operating system. The court trims the penalty from $4.3 billion to $4.1 billion. India's wholesale inflation cools marginally in August to 12.41%. This is the slowest pace of increase in the last 11 months, even as prices remain in double digits for 17 months in a row. Inflation in the UK eases slightly to 9.9% from a four-decade high. A surprise drop in fuel prices aid the decline, even as food prices remain a concern. 8 Congress MLAs in Goa, including the former Chief Minister Digambar Kamath, joined the BJP, reducing the grand old party's strength to 3 in the Assembly. The Pramod Sawant government now has a strength of 33 in a House of 40 legislators. Well, those are the headlines that we are tracking, but straight to the big interview of the day. India, the world's largest rice exporter, has banned exports of broken rice and imposed a 20% tax on the exports of various grades of rice. All of this in order to bring down prices in the local market. This has left rice exporters worried. They are seeking an exemption for at least the consignments for which advance has been received. They've also complained against the 20% levy. Meanwhile, as per latest available data, deficit in paddy sowing due to inadequate rainfall in states like West Bengal, Jharkhand, Uttar Pradesh and Bihar stands at around 6%. Retail food inflation has accelerated to 7.6% in August on the back of a rise in prices of cereals, vegetables, pulses, milk and milk products. To talk about all of that and more, we're now joined by the Food Secretary, Sudhanshu Pandey. He's also part of the Cabinet Committee of Secretaries on Essential Commodities, and the committee meets every week to take stock of availability of essential commodities and monitors their prices as well. Mr. Pandey, always a pleasure. Thanks very much for joining us here on CNBC-TV18. Let me start by asking you about the latest measures taken by the government to ensure that there is adequate supply in the domestic market and also check price rise. Let's talk about the export curbs on rice specifically. The Exporters Association has expressed its concerns on the fact that this, these are decisions that are taken overnight, not advance notice or time is given, and hence some concessions should be made. For instance, on the consignments that have already been agreed upon. Are you open, willing to consider those requests?
See, you have to see the whole issue in the context. Recent some of the regulations that have been brought on the rice export, a very major quantity has been left out. That unfortunately is not getting highlighted. Say, for example, a very major chunk of parboiled rice is exported out of India. No curbs have been put on that, and it goes to countries like Bangladesh and many of the Western African countries whose requirement and need of this quality of rice, they are totally dependent on India. So that has been exempted. Likewise, for the Middle East and some of the WANA countries, we export a lot of basmati rice. That has also been kept out of the regulations. It is only for 2 categories largely where some regulations have been brought. One is the broken rice, and if you see the broken rice price trend in the domestic market as well as the export in last 4 months from April to August, then the broken rice export has gone up from 50,000 ton it used to be in 19, and it has increased 4,200% for this corresponding period of 4 months. So this is not a normal export growth. 42 times is a very abnormal growth. And this has led to spike in the prices in the domestic market. It used to be around 15-16 rupees in the domestic market. It went to almost 22 rupees in the domestic market. What it does basically then, it affects the prices for the poultry feed, cattle feed, and it impacts then the prices of the poultry product and the cattle products. And about 60 to 65% cost is the feed stock cost for these products. So therefore, in a situation when the prices have to be controlled and this export is not normal export, this has to be then seen from that perspective. Therefore, I think seeing the big picture is extremely important.
So let's understand this big picture. You're saying that the kind of spike that we've seen in the export of rice, specifically of the broken rice category, is up almost 4,200%. You've called it an abnormal surge. What do you attribute this abnormal surge to? What do you attribute this surge to? And secondly, in terms of the prices, you said that they've gone up from 15 to 16 rupees now to about 22 rupees. When do you start to see these measures impacting domestic prices?
Yeah, so two questions, very pertinent questions that you have posed. What was the reason for this abnormal spike? One of the main reasons was that the global supply chains across the world, they have got disrupted, and many countries who used to be traditional exporter of broken rice along with India, they have not been supplying that quantity, and as a result of which the entire push was coming from India, and they were trying to fill that gap. And of course, any trade opportunity that comes the way of exporters, they would certainly like to make use of those, but government has to balance the interest of all parties. And therefore, when this price hike also became very abnormal, and therefore this intervention became absolutely necessary.
Okay, so you're saying that this intervention was necessary to try and...
On the broken rice, this step has...
Right, I understand. I want to understand from you if you've got more clarity on what the situation is like at the ports at this point in time. We saw, a reiteration of the circular issued by the government ostensibly to try and clear up things that have been held up at ports. We're given to understand over 1 million tons of rice shipments are stuck at various ports. Is there any understanding on whether things have started to improve on the port front?
See, these measures, whenever they are taken, they are taken after a particular evaluation of a situation. And all over the world, the export restrictions or import restrictions, whenever they are brought in by any government, then both the exporters and importers, they renegotiate their contracts and they align their conditions to the new reality. So this happens, many countries, they put export duties, they put export curbs, import curbs, they put also import duties, and between the importers and the exporters, these terms are renegotiated and they are taken care of. So this is not something which is abnormal. This is normal practice in the trade, and that gets adjusted.
Yeah, you believe that it gets adjusted, but sir, at the end of the day, exporters also believe that this does put a question mark on the sanctity of contracts that they get into, and that is perhaps the pain that they are expressing to the government, because it lends doubt to the contractual obligations that exporters find themselves committed to. But let me move away now and ask you whether any further intervention in any other category is required at this point in time. As we pointed out, you're a member of the committee that monitors pricing as well as availability. Given the various measures across different categories already announced, any further action, any further intervention warranted?
See, first thing also I must answer about the contractual honoring the contracts between the two parties. See, in all international contracts, all companies who have been into this business, they have this standard clause that if any duty is imposed, either increased or reduced, in fact, even the export incentives which at times were being given, whenever they were given, the importers of various countries used to renegotiate the contract and used to insist taking some of those benefits out of this scheme. So there is a general clause always in various contracts that if there is any regulation brought by the respective governments on both sides, then they will be taken by both parties. So this is not, as I said, this is not something abnormal. This is a very normal standard condition which is part of the contract. As regards the second question that you have raised, government is reviewing, we have a mechanism, institutional mechanism of almost reviewing all commodities which are essential in nature, are of consumer interest, importance. Particularly now the festive season is also coming, their review is taken, their prices are monitored, their availability is ensured. So everything is happening on day-to-day and weekly basis. So as of now, government is reviewing every day situation, and for the time being, as I see, that whatever steps were necessary, they have been taken. And as of now, there is no other thing that we feel is necessary.
Okay, as of now, you don't believe that further intervention is required. Let me understand from you what the situation looks like as far as edible oils are concerned, because we saw intervention by the government there to try and cool prices down, and prices have come off very sharply, almost 45% off their highs. So can you explain to me whether the government finds itself comfortable now as far as edible oils is concerned? And, you know, there was a duty-free exemption allowed till March. That extension was granted as far as soy was concerned. Is that likely to continue, or will you now review that given the kind of decline in prices that we've seen?
See, if you see the prices that have seen fall, decline on regular basis among all edible oils, especially those which are imported into the country, it is very significant decline. But if you compare it with the pre-COVID period, especially soybean and sunflower oil are still high by about 30 to 40%. This is 2 year if you consider rates in that cycle. And normally annual increase should not be more than 4 to 5%. So by that logic, in 2 years the increase at best could be 10-11%, but not 40% or 30%. So they are still not at their normal rate because of various factors that are due to pandemic impact. But prices have come down, and government has already announced TRQ, the tariff rate quota of 20 lakh metric ton both for soybean as well as for sunflower oil at zero duty. So it is not only March, 2 years quota has already been announced by the government, but first year's application is till March, and next year's application will start thereafter. So government policy is very transparent and very open, and therefore market should be able to actually import that quantity to give benefit to the consumers in the domestic market.
Since you talked about the festive season, Mr. Pandey, let me talk to you about sugar as well, and what the outlook is like as far as sugar is concerned, and specifically on whether we're any closer to making an announcement as far as the export quota is concerned.
See, there are three issues. Number one, of the previous sugar quota that was allowed by the government of 112 million lakh metric ton, out of that 107 lakh metric ton has already been exported, which is highest ever in the history of India. So this is credit to the government that 107 lakh metric ton sugar has already been exported, and still we are left with another 5 lakh metric ton balance quota that is available with us, and we should be in a position to meet the requirement of our neighbors in particular, and like Nepal, Bhutan, Bangladesh, Sri Lanka, Maldives, all these countries' requirement comfortably we can meet, apart from meeting our own requirement. In domestic market, by the end of September this month, we will still be left with a stock of about 60 lakh metric ton, which is more than adequate for meeting our requirement of next 2.5 to 3 months. And as a result of this availability of stock, we have very stable prices of the sugar in the domestic market. And as regards the quota or the policy, export policy for the next year, government is working on it, and very soon they will come out with the export policy for the next sugar season.
Okay, so we still have to wait for the government to announce the export policy as far as sugar is concerned. Let me ask you about what concerns you specifically when we talk about sowing. And, we pointed out at the start of the program, the latest situation as far as paddy sowing is concerned, about 6% lower year on year as of the 2nd of September. How worried are you about that, and any other specific vulnerabilities or areas of concern that you're monitoring more closely?
See, on the rice, we are not vulnerable at all. At the moment, our central pool stock position is about 230 lakh metric ton. We have availability of rice. We have about 240 lakh metric ton of wheat also. So we are comfortable in terms of stock. And the coming procurement estimate, we just had meetings with all states across India last week, and our estimation is that for the Kharif season we would be actually procuring a little more than what we procured last time. The state's estimate was about 570 lakh metric ton, but even a very conservative estimate from our side is about 510 lakh metric ton, which is almost 10 lakh metric ton more than what we procured last year. And then Rabi season will also come, where we can comfortably procure about 100 lakh metric ton. So 600 plus lakh metric ton procurement of rice is very comfortably seen in coming months, and therefore as far as rice is concerned, we are going to be in a comfortable position, and we need not worry on any account.
Okay, so no concern there as far as rice is concerned. You believe that you'll be able to procure 10 million tons more than last year. Food inflation, the general outlook on
10 lakh metric tons, 10 million.
Sorry, 10 lakh metric tons. On account of the measures already undertaken, what is the expectation in terms of food inflation? Because that, of course, continues to be on the higher side. Do you believe that we will start to see some degree of easing there, some degree of normalization starting on the back of the measures announced already?
See, we are following basically two-pronged strategy. Number one, ensuring availability. So ensuring availability, whether through the import route or through the increase in the domestic supply, is one part of the strategy. So if you ensure adequate availability, the food inflation will come down. The second part of the strategy is ensuring smooth distribution. So right from the stockist to distributor to the retail, the distribution chain, whether cereals or edible oil or some of these essential commodities, we should have very smooth and hassle-free kind of facility. So whether use of rakes by the railways are concerned, adequate number of rakes are being made available for all supplies to be taken to various parts of the country. So on both these fronts, we feel that we should be able to contain food inflation because by ensuring availability and ensuring its proper distribution, we should be able to contain prices. You have already seen that some of these prices have come down, and in future also we should be able to intervene effectively.
Mr. Pandey, let me end by asking you, I had a conversation with the MD of the IMF a few days back, and, there was a cautionary message there in terms of food protectionism. And, of course, also an acknowledgement of the fact that, look, India must do what it needs to do in order to protect its domestic market and its citizens as well. But perhaps there needs to be a balance. As we move down the road, in light of the concerns expressed, is there likely to be a review of not just the measures that we have undertaken, but also the manner in which the measures have been undertaken?
Let me give you some it's a very important question, and I think for everyone it's important to know. A lot was talked about wheat regulations. Before the imposition of those regulations, we had exported about 21 lakh metric ton of wheat. And after the regulation, we have exported about 24 lakh metric ton of wheat. So, and so far we have exported about 45 lakh metric ton of wheat. Why I am giving these figures? That India has been very responsible, and despite regulations, we had kept certain windows open to take care of all vulnerable countries, all our neighbors, and figures very clearly reflect that all those requirements have been very carefully met and their needs have been satisfied. So India behaves in a very responsible manner. Situation because of the pandemic globally has been abnormal, but despite those pressures, we have been able to handle this situation in a very responsible manner. We are still largest exporter of rice with about 41% share of both Basmati, non-Basmati rice. And this year, our exports so far till last month for about 72 lakh metric ton, which is almost 16-18% higher than the previous year. So these regulations are basically preventing speculative trading, stocking, but genuine requirement of various countries is being met fully.
Mr. Pandey, always a pleasure. Thank you very much for joining us here on CNBC-TV18 and giving us a very comprehensive breakup of where things currently stand across different commodities and what the outlook is going forward. Appreciate your time. That is the Food Secretary, Sudhanshu Pandey. We will take a break here on Business 360. Don't go anywhere. We return with more news. Well, here's the action on Dalal Street, where the bulls showed resilience, staging a sharp recovery after an early slump. However, the Sensex and the Nifty still ended the day in the red, but losses were not steep. Bank stocks leading the recovery, with the Nifty Bank Index ending at a lifetime high. Our markets performed much better than the global markets. In fact, it was a sea of calm in comparison to the kind of volatility we saw in the global markets. In the money market, the rupee weakened against the dollar. US inflation data led to a rally in the dollar index as investors placed bets on the US Federal Reserve tightening its monetary policy even further. The rupee remains below the 80 mark against the greenback. India's 10-year bond prices also dropped and the yields went up in trade today. IT companies are increasingly concerned about their employees moonlighting or taking up other jobs after working hours. Speaking against the practice, Infosys in an email warned employees about severe consequences if they are found violating the code of conduct. The company said, and I quote, "No two-timing, no moonlighting and no double lives. Any violation could lead to termination of employment," end of quote. The warning from Infosys comes days after Wipro chairman Rishad Premji in a tweet had called moonlighting in the tech industry, and I quote, "cheating, plain and simple," end of quote. Global tech giant IBM has also decided to call this out, saying that this is uncalled for, and IBM will not accept this as part of its code of conduct either. Take a look.
You know Rishad's position on this, right? I share Rishad's position. In IBM, all of our employees, when they are employed, they sign an agreement which says that they are going to be working full-time for IBM. So, notwithstanding what people can do with the rest of their time, it's not ethically right to do that. That's my position. Now, and you've heard the industry position on it, so I'll keep it at that.
Well, Sandeep Patil of IBM, the latest tech company to call out moonlighting, saying that it will not be acceptable as part of the company's policies. And with that, it is time for us to wrap up this edition of Business 360. Stay tuned. The news continues here on CNBC-TV18.